Hello friends, and welcome to Looking at the Markets with David Modell. Today I'm going to give a basic explanation of the London Daybreak strategy, also called the London Breakout strategy. Okay? And before I get started, if you need any coaching, I do offer that for putting together a trading or investing plan because you really want to have one. Or if you need help with charts and candlesticks and technical indicators, picking out stocks to trade, options, things like that. You can contact me by email at davidmodell@gmail.com. Also, I have a number of free financial reports. You can download one or as many as you want. You can find them in the description below this video. You can click on Show More and it'll show you all the different free reports. So feel free to check out those financial reports. All right, so the London Daybreak or Breakout strategy explained. This is the version of the strategy that I'm aware of and might not be the same as what other people would call the London Daybreak or Breakout trading strategy. So this strategy is to be used when the London session opens at 8 o'clock a.m. London time, which would be 3 o'clock in the morning Eastern U.S. time. Therefore, it's mostly applied to currency or forex trading because it's at a time when the New York Stock Exchange and the NASDAQ exchange are not open in the United States. But I'll mention later that this strategy can be modified to New York Stock Exchange stocks or the NASDAQ stocks. You would just have to modify it, okay? So you can apply this to stocks and things like that. So first, check the news and make sure that there are no major economic events that could cause problems for this strategy, which uses technical factors rather than news-related events. All right, you want to make sure, if possible, that some news-related event is not going to skew or ruin the results here. All right, so if you're going to use this for currency pairs, you want to choose a currency pair with plenty of volume or liquidity, such as the Great British Pound to the US dollar, for example, or the Euro to the US dollar, or the Japanese yen to the US dollar, that kind of thing. And if you're going to apply this to stocks, then you want to pick stocks most likely with plenty of volume, plenty of liquidity, because this is mainly an intraday trading strategy, so you want to be able to get in and out of your positions easily without a lot of slippage. All right, so if you're using this as an intraday strategy, which is the main purpose of this, then you should put up a 1, 2, 3, or 5-minute candlestick chart. Keep that ready on your screen because those are ideal for day trading, intraday trading. So after the London session opens, if the price is below the 50-period exponential moving average, or EMA, if it's below, you're going to consider that to be bearish. And so that's good for a short position. So if it's below the 50-period EMA, wait until the price closes below the lowest price of the last 4 candlesticks. So look at the last 4 candlesticks, all right? Find the lowest price, including the wick or shadow, okay, of those 4 candlesticks, not just the body. Then you can take a short position if it closes below the lowest point of the last 4 candlesticks. This is all only if it is below the 50-period EMA. All right, so then you can take a short position, and your stop loss will be at the highest point, the highest price of those same 4 candlesticks, including the wicks or shadows. Okay, and I'll show you what that looks like. All right, I drew a picture here. All right, so as you can see, after the session opens, the candlesticks are, they're below the 50-period moving average, exponential moving average here. All right, so find the lowest and wait until 4 candlesticks form, obviously, so you can judge and find out where the if you want to take a short position because it's below the moving average, and you're going to follow that trend, that bearish trend. So you find the lowest point of those the last 4 candles, including the wicks or shadows. So here it is. That's the lowest point. Okay. And I drew a box around it to help me identify the lowest point and the highest point of those 4 candlesticks, because the highest point will be the stop loss, which is the dotted line here. All right. So, but enter after a candlestick closes below the lowest point of those 4 candles. All right. and it happened like immediately, like right here. It doesn't always happen immediately. I mean, it could have happened later, you know, or not at all sometimes. If it doesn't happen at all, then you don't take a position. That's okay. But, you know, in this case, it happened the very next candle after the first four. That's okay. And so I would take a short position here, all right? The first time it closes below the lowest point of those first four candles, or the last four candles, I should say. All right, so take a short position, and it started to go against me, so I have a stop loss, which is the highest point of those last four candles, all right, which is right here. So it started to go against me, but I didn't get stopped out, and it went down and down and down, and I did quite well with that, okay? And you also want to have an idea of when you're going to take a profit, but that's a whole different, you know, whole different video. All right, I do have videos on, you know, taking profits, you know, finding out when to do that. But anyway, so that's for taking a short position. Now, what if you want to take a long position? Well, if the price is above the 50-period EMA, okay, so this was an example of below, all right, for a short position. If the price is above the 50-period EMA, wait until the price closes above the highest price of the last four candlesticks. So it's just the opposite, basically. And then you can take a long position. You can buy. And the stop loss would be at the lowest price of those four candlesticks. So it's just the opposite. You just flip it all around. Okay, so I'll show you an example that I drew. All right. So as you can see, you know, the session opens, and, you know, you wait for four candlesticks at least to form. And then, hey, okay, you look at the last four candlesticks, and they're above the 50-period EMA. And so I'm going to take a bullish stance on this. So I'm thinking about taking a long position, and so you would wait until a candlestick closes above the highest point of the last four candles. All right, and you would set your stop loss at the lowest point of those last four candles. That's a dotted line here. All right, and again, it happened the very next candle. It doesn't always happen like that. I don't want to give the wrong impression. You know, it could wander around and then break above that point, you know, here, wherever. Okay, or it may never happen. It may just go down and never close above this point, and that's fine. You don't take any position then. All right, so the very next candlestick, it happened to close above the highest point of those four candles, and so I took a long position, and I was never in any jeopardy of getting stopped out, but if it did go down, I would get stopped out right here, okay? But it just went up and up and up. All right, now you can actually enhance or improve on this strategy. Here's how. To enhance this strategy, you can create a sort of a trailing stop loss by updating your stop loss every hour to the lowest price of the previous three candlesticks for long positions, or the highest price of the previous three candlesticks for short positions. All right? And so in other words, you can update where your stop loss is every hour. All right? So you're kind of trailing it in a way, or at least updating it. So, you know, every hour, just look at the last three candlesticks, and you could draw a box again around it if you want to, or just find out where the lowest point is of those three candlesticks, and including the wicks or shadows, and that could be your new stop loss. If you took a long position. If you took a short position, it could be, you know, update it for, look at the last three candlesticks and change your stop loss to the highest point of the last three candlesticks for short positions. Okay. So what if you go for a long time without getting stopped out? Well, if you haven't been stopped out by the end of the London, and we're assuming you haven't taken profits as well. It's a good idea to know where you're going to take profits. You know, either by you know, percentage gain, or you know, dollar gain, or you know, whatever the currency is. So you want to have some sort of take profit calculation in mind as well. But let's say it just goes sideways for a long time. So let's say if you have not been stopped out by the end of the London trading session, it is recommended that you exit your position, just get out, in order to avoid big gap ups or gap downs, you know, the next day. All right. because this is meant to be closed by the end of the session, of the trading session, so it's intraday. And this strategy, as I mentioned, could be modified to use other times of the day, such as the New York Stock Exchange trading session or the NASDAQ, whatever. So this can be used for stocks and other types of asset classes. All right? So be aware that like all trading strategies, this does not work 100% of the time. And it is a good idea to always test it out with virtual or paper trading for a while to make sure that it works for you before committing any real capital or money to it. All right, so please be careful out there. Take small positions, and it's okay to take no positions for a while and just learn about it at first. All right, and speaking about learning, if you need coaching, if you're looking for coaching, for help with these kinds of things or putting together a plan, my name's David Modell. You can email me at davidmodell@gmail.com. And again, please check out those free reports below this video in the text description. Download as many as you want. All right. And if you like this video, please give it a thumbs up on YouTube and leave a comment. And if you have not subscribed yet, why not do it right now? Subscribe and hit that notification bell on YouTube so you'll get updated whenever I put out new videos like this one. Hey, I really appreciate you stopping by. Thanks a lot. I'll talk to you again soon.